You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 21st day of May, 2026. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room. So to get in there, you got to be a member or taking the 1-week free trial. This broadcast, on the other hand, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. Now, the benefit of doing it that way, you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 3,000 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more, a lot more. Now, obviously, you're not going to watch them all, nor do you need to. But if you're new, it's a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. At the top of the hour, 1 p.m. Eastern, roughly, Michael will join us. He'll give us a recap of everything that happened this morning in the live training room, and then do a little live trading as time and the markets permit. We're going to get started where we always do on each afternoon broadcast with our daily devotional. the topic that we've been on now for 28 trading days. Everyday faith. Today's scripture is Luke 5, verse 8. And I'm going to share it today from the NLT translation. When Simon Peter realized what had happened, he fell to his knees before Jesus and said, "O Lord, please leave me. I'm such a sinful man." Luke 5:8. Sorry about that, a little technical glitch on my end. So again, the nexus of that scripture was, "Depart from me, for I am a sinful man, O Lord." When Peter fell at Jesus' knees and spoke those words, something more than surprise was taking place. He had witnessed a miracle, but what unsettled him was not the volume of fish, it was the presence of holiness. In that moment, he understood that he was standing before more than a teacher. The weight of who Jesus was pressed in on him, and self-awareness followed quickly. Peter recognized the distance between who he was and who stood before him. So he said, "Depart from me." The instinct of exposed humanity is retreat. When light shines clearly, we become aware of what it reveals. I tried to instill something into my children as they were growing up. When you get in trouble, when something goes wrong, I don't want you to think, "Man, Dad is going to kill me." I want you to think, "I better call Dad or go talk to Dad, because he'll know what to do." And as Christians, as believers, as followers of Jesus, too often when we screw up, we run from God instead of running to God. And that's really the message of what we're trying to convey here today with this scripture. There is a kind of encounter with Christ that inspires admiration, and there's a deeper one that reveals reality. Inspiration allows us to remain comfortable. Exposure touches motives, pride, hidden compromise. Peter felt that exposure, and it led him to utter humility. Yet Jesus spoke calm into fear and purpose into weakness. "Do not be afraid. From now on, you will be fishers of men." The very man who felt unworthy was called forward. Holiness in Christ does not recoil from weakness. It addresses it and then commissions it. The one who reveals our inadequacy is the one who overcomes it. He is not unaware of our failure. Often we step back when conviction comes. We fear rejection. But in Peter's story, the recognition of sin clarified his need and anchored his dependence. The presence of Christ reveals what is lacking in us, yet it draws the humble closer. There's no need to hide your sin from him. He already sees everything. Jesus restores the humble, honest sinner. So when you mess up, screw up, don't turn from God. Run to God. Question for you. Do you hide when your sin is exposed before Christ? Do you run from him or straight to him? Let's pray. Heavenly Father, we confess our wickedness, our unworthiness, our sin. Lord, let conviction bring us to you in repentance rather than drive us away from your healing and restoration. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Thursday. All right, I'm going to give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Then we shall take a quick peek at the news, and then we'll get to the alerts, then we'll get to the charts, and then Michael will join us at the top of the hour. All right, starting here in the U.S. with the cash markets, or the indices as they're called. The Dow is currently down 40 points. NASDAQ's down 81. S&P 500 down 17. The Russell 2000, or man in the street, is positive by 1 point. So things could be worse, right? Now, the whole world was waiting on those NVIDIA earnings yesterday, which were a blowout in a good way, which is just one more example, I think, of that old saying, buy the rumor, sell the news. In the commodity basket, crude oil is on the rise, up $1.85, trading $100.08 last. That's a gain of almost 2%. Gold down $18, make that $17.90. Trading $45.17 last. Silver down a penny, trading $76.17 last. In the Asian markets at the close, the Nikkei posted a gain of 1,879 points, 3.25%. The Shanghai fell 84, that's a little over 2%. And the Hang Seng dropped 264, that's a little over 1%. In the European markets at the close, FTSE up 11, the DAX down 80, the CAC down 31. So we had a mixed day in Asia. It was a mixed day for the UK. And, well, let's just call it a Red Radio Thursday for the moment. The Russell is now up 0.5 point. So, however, we do know that the Russell can sometimes lead the other markets. Now, you can't build a trading strategy around that because it doesn't always lead the other markets. But if of the four major indices, if there's any green on the screen I'd like to see, it is the Russell. So, do with that as you will. News. This is good news. The last episode of The Late Show with Stephen Colbert Airs tonight on CBS at 11:35 p.m. Eastern after an 11-year run. The episode, an extended finale, marks the end of the Late Show franchise, launched in the post-Johnny Carson 1990s. CBS announced last year that it would end the show, citing financial reasons. Colbert led that time slot over competitors Jimmy Fallon and Jimmy Kimmel, averaging 2.4 million viewers per episode last year. However, late-night viewership has dropped since the 2010s, while production costs have reportedly risen. The decision came amid long-standing tensions between Colbert, whatever, and President Trump, and as Paramount sought regulatory approval for a merger with Skydance Media. There's an interesting interview. It was done in 2015. Colbert interviews then candidate President Trump. The Late Show slot will be filled by Comics Unleashed, hosted by Byron Allen. Colbert will continue co-writing a Lord of the Rings film. Oh, I can hardly wait. Comics Unleashed. You know, the problem with these late night talk shows is they only talk about one thing: Trump. And, well, the ratings speak for themselves. The Justice Department yesterday unsealed an indictment against former Cuban president Raul Castro for murder and conspiracy to kill U.S. citizens. The charges stem from the 1996 downing of 2 civilian planes that killed 4 Cuban exiles. Survivors and victims' relatives spent 30 years pressing for criminal charges against Raul, who at the time served as defense minister. His older brother, then Cuban President Fidel Castro, took responsibility for the attack, claiming the activist group operating the plane had previously distributed anti-communist pamphlets. The group maintained it was searching for people fleeing the island nation by sea. We all remember those photos and news clips of all those boats leaving Canada trying to make it to Miami. God, a lot of lives were lost. This indictment lays the groundwork for potential U.S. military action to extract 94-year-old Castro from Cuba, similar to the January operation against Cuban ally and former Venezuelan President Nicolas Maduro. Since Maduro's capture, the U.S. has imposed a de facto oil blockade to weaken Cuba's communist regime. In case you don't know, communism, bad. Socialism, bad. It doesn't work. Eventually you run out of other people's money to give away. I really feel sorry for the people of Cuba. Man, they're suffering like they're going hungry. Now, this is a beautiful island. It's a tropical paradise. And the streets are filled with American cars from the 50s, 60s, and they're in just primo condition. I'm sure you've seen pictures. I think if we go in, now this guy's 94 years old, so based on the actuary table, he doesn't have a whole lot of time left here on planet Earth. But I think this is a first step. I think the next step will be that we actually take Cuba. Maybe that becomes the next U.S. possession. We could bring a lot of relief to those people, put food on their shelves, in their refrigerator, and help them start businesses, become entrepreneurs. I mean, there's some great people in Cuba. I have nothing whatsoever against the Cuban people. What I am very much against is communism. And again, a picture-perfect example of communism doesn't work, and the people suffer. Harvard University's faculty voted yesterday to restrict the number of A's an undergraduate professor can award students. The new policy, set to go into effect in 2027, caps the number of A's in each course to 20%, with the flexibility to award up to 4 additional A's. A minuses will not be impacted. The decision comes as the number of A's awarded at Harvard has grown from 25% of grades in 2005 to 2006 to 60% last year, with AI potentially expediting grade inflation. Faculty warn the trend could harm the university's credibility in the eyes of employers and graduate schools. One professor also suggested grade inflation negatively impacts enrollment in courses taught by professors who give out A's sparingly. The decision is unpopular with students who are concerned the new approach will reduce collaboration between students and impact their mental health. Cry me a river. Harvard faculty also voted yesterday to replace GPA with percentile rank to determine honors, such as cum laude. Turning to Wall Street. Yes, NVIDIA reported their earnings yesterday, and they're down almost 2% on good earnings. NVIDIA stock fell slightly and extended trading after the artificial intelligence chip giant's first quarter earnings and revenue surpassed Wall Street analyst expectations. This is not your father's market. Once upon a time, in a land not so far away, good news sent the market higher, bad news sent the market lower. Well, that's not the world we live in anymore. In addition to the earnings release, NVIDIA's CFO shared commentary that revealed 4 key developments in its business beyond the company's first quarter earnings per share beat. Hyperscalers make up half of NVIDIA's biggest revenue driver. First, NVIDIA said hyperscaler customers like Amazon, Alphabet, and Microsoft still account for half of NVIDIA's data center revenue. Hyperscaler revenue increased 12% in the first quarter to $38 billion. The other half of NVIDIA's data center revenue came from AI clouds, industrial, enterprise, and sovereign customers. NVIDIA didn't report any China revenue. I think that's important. NVIDIA said they did not ship any Hopper products to China during the quarter, compared with $4.6 billion in China revenue in the first quarter of fiscal year 2026. Although the U.S. approved the export of these tightly controlled chips, officials in Beijing have discouraged Chinese businesses from buying them as they seek to boost China's domestic chip industry. SpaceX has finally given investors their first look at its massive IPO, setting up what could be one of the most lucrative stock listings ever handled by Wall Street banks. The rocket maker's preliminary S-1 filing offered an inside look at Wall Street's lineup behind a reported $75 billion share sale. An offering of that size would shatter the world's previous IPO record, a $26 billion IPO set by Saudi Aramco in 2019. Goldman Sachs and Morgan Stanley will serve as the two lead investment banks on the IPO, which includes a total of 23 investment banks. It's far from clear what fees any Wall Street firm stands to make from the transaction, but hypothetically, the deal will be a cash cow to these banks. Based on the listing size, the total fee pool for bankers could range anywhere between $800 million to more than $1 billion. With its name appearing first on the list of banks advising and underwriting the offering, Goldman Sachs landed the coveted lead left position. The role garners prize status on Wall Street, which means bragging rights for the investment banking giant. Did you know that they only have like 3 down days a year? Now, the rocket maker's preliminary S1 filing offered an inside look at Wall Street's lineup behind a reported $75 billion share sale. And we talked the other day about the fact that they did a 5-to-1 or a 1-to-5 stock split. Because this thing is so heated up, so anticipated, the per share price was getting so high, most investors weren't going to be able to afford to participate. So this doesn't change the value of a company when the stock splits. If you own one share worth $100 and there's a 5-to-1 split, you now own 5 shares instead of 1, but it's still worth the same money, $100. But by breaking it up, it makes the per share price more affordable. Once again, the bond market is signaling to the Federal Reserve that interest rates aren't high enough. Unbelievable. The bond vigilantes are threatening that if the Fed doesn't tighten credit conditions, they will do so to maintain law and order in the economy. JP Morgan CEO Jamie Dimon warned today that interest rates may climb much further, telling Bloomberg that rates can easily go up more and credit spreads can go up even more. The rise in bond yields comes as the latest data shows inflation heating up amid the war in Iran, while other economic data suggests resilience in the face of higher oil prices. As we already covered, most of the market is down today so far. And it has to do with Iran's supreme leader, who issued a directive that the country's near weapons-grade uranium should not be sent abroad, raising doubts about the progress of peace talks between the U.S. and Iran. You know, I don't understand why our president, who I support 100%, why is he dragging his feet? I'm sure he's got a plan. I just wish I knew what it was. Every morning I'll wake up and turn on the TV to find out if he's finished the job. He said when it's time, it will take about 4 hours to finish the job. The Trump administration has agreed to take $2 billion in equity stakes across 9 quantum computing companies, including a new IBM venture, as part of its broader push to shore up the domestic supply chain and counter China in crucial sectors. Remember the Black Eyed Peas? Yeah. Will.I.am is back in the news. Humans aren't losing jobs because of AI. Humans are losing jobs because of inhumane business practices. Again, that's from musician, entrepreneur, and tech investor will.I.am of the Black Eyed Peas. He added that it was inhumane for companies to lay off workers who created and operate the AI agents. The laser focus on efficiency also takes away the human experience in business. One can make sense that the reason why companies are letting go of humans is because of efficiency. But you're lacking that human experience, will.I.am said. And now, with a human and the agent that they own, you have efficiency and a human experience. This lived experience, and that there's no excuse anymore to undermine the value of a human being. The growing impact of AI can be seen in billionaire Jack Dorsey's Block, XYZ, this year slashing 40% of its staff. Layoffs also swept across Amazon, Oracle, Coinbase, Cloudflare, and Meta. With billionaire founder Larry Ellison still pulling the strings, Oracle reportedly laid off up to 30,000 workers across the US, Mexico, and other countries on April 1st. Amazon has reportedly slashed 16,000 workers this year as part of its AI efficiency push. Coinbase is fresh off announcing a 14% reduction in force this month. Cloudflare just cut bait with 20% of its workforce, and Meta is in the process of cutting 10% of its employee count. will.I.am said, yes, it's going to render a lot of jobs obsolete. It's also going to create a lot of jobs. The Black Eyed Peas frontman with 7 Grammy Awards and more than 35 million albums sold knows a thing or two about tech. will.I.am was an early investor in Beats Electronics, the headphone company that Apple acquired for $3 billion in 2014. But he didn't stop there. He also founded I.am Plus, his own tech company, focused on AI-powered wearables and consumer devices, and has spent years positioning himself at the intersection of music, fashion, and artificial intelligence. All right, I'm going to wrap it up news-wise here. When analysts and investors talk about the upcoming SpaceX IPO, likely to happen around June 5th, you don't got much time. They are in large part talking about Starlink. The satellite internet service has grown from an engineering project into the dominant revenue machine, supercharging the world's most valuable private company. In the company's IPO prospectus filed on May 20th, SpaceX revealed it lost nearly $2.6 billion last year, but that was due to its AI efforts. But SpaceX's connectivity segment, which includes its Starlink satellite service, earned around $7.2 billion in adjusted EBITDA. That's how you say the word. If you don't know what that is, don't worry about it. It's up a healthy 86% year over year. Competitors in the satellite internet space are either way off or work only in commercial applications such as aviation. Amazon's LEO service isn't available yet. However, CEO Andy Jassy promises it will be up and running at some point this year. A tough order considering Amazon has only a handful of satellites in orbit. So that's just one more reason. And also they disclosed how much Bitcoin they own or have in their corporate treasury. ARKVX. I lost my little scrap of paper that I had here. Is that it? No. But I've given you my picks I'm not recommending that you buy or sell anything. Do your own due diligence and speak with a licensed investment professional before making any investment decision. Okay, Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. We're currently in week 407. Over the last 407 weeks, we've issued over 22,300 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based simply on market structure. A simple process we teach all of our passport holders. Now, I didn't put anything out Sunday night because my platform was down. So for Logic 247, the week really began Monday night at 6 p.m. Eastern when the markets opened. Since the open Monday night, we've issued a total of 42 alerts. When Valerie did the recap this morning at 6:30 a.m. Eastern, we were still waiting on the outcome of 9. So that's 33 actionable alerts. We've had 3 stop outs, 9%. 2 weeks ago, we had 0%. That was a historic first in 7.5 years. But again, over 407 weeks, what we've averaged on a weekly basis is 20% or less getting stopped out. Now, the purpose of the Logic Alerts is to help you learn how to read a chart. If you never actually trade an alert, use them for the purpose intended. Every Logic Alert has an entry price, long or short, an initial target. In most cases, additional targets, then a final trade to target. The Logic Alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, I did this, I don't know, a week or so ago. But let me just pull this up. This is where we began the week 407. Last week, we ended up with 75 alerts issued, 16 never triggered, 59 actionable alerts, 4 stop outs, 7%. And again, we didn't put anything out Sunday night. We started Monday night and we began with a long on gold. The idea here was to buy 45.84. The initial target, 45.85, that would give you your goal for the day. Price eventually rose to 45.93. Now, B means buy, T is initial target. If you're in a long trade, you need to know where you're likely to run into potential resistance. So, I said one area, 45.93. We made it to 45.93.2 on that move. Okay. So from 84 to 93, that's $900 per contract traded. Then we had a long on silver, 79.18, and we made it up to 79.33 on that initial move. 2 pennies is worth $100 per contract traded. So you can do the math. Then we had a long on the ES, buying 74.50. Initial target, goal for the day, 75.42. Potential resistance at 54. And then potential resistance at 75. But on that move, we only made it to 74.58. So that's 8 points, $50 a point. Then we had a long on the Dow, had a long on the Russell, stop out on the NQ, short on crude, long on crude, short, initial target, and then on a short, you're looking for the areas where you're likely to find potential support. And on this move, we found it at 45, 45.8. We didn't get that far. Short on silver. Short on the ES. Short on the YM. Short on the Russell. Short on the NQ. Now that all happened Monday night. And then we roll into Tuesday. Stop out on the ES. It was a long on the ES, a short on the Dow, a long on the Dow, a short on the Russell, long on the Russell. This is a short on the NQ, a long on the NQ. This is one of the ones we're still waiting on. There's a short on crude. When the price of crude moves $1, that's worth $1,000 per contract traded. Here's a short on gold, selling 44.79. We dropped to 44.58. That would be $2,000 per contract traded. Here's a long on gold. That one was worth $680 per contract traded. Short on silver, long on silver. Now we're rolling into Wednesday. And we got a lot of these here that we're still waiting on. There's one of the other stop outs on the ES. Long on the Dow. Long on the NQ. Short on crude. Still waiting. Long on silver. Remember, with silver, you only need 2 pennies to get your goal for the day. And that's where we stand on those. Now, long before we introduced Logic 247, which was 7.5 years ago, we had our original alert service, the concierge trade alerts. Now, they're different in a lot of different ways. For the purpose of this discussion, I'll just say they typically come out 5 minutes ahead of the Globex Open, as they did Tuesday night. Last night, I had to run an errand and I was late getting back. So I let everyone know in the discussion group that they would be out late. Most of the time, this number is going to say 5:55 p.m. Eastern. The Thursday session that we're in began last night at 6 p.m. Eastern. So what that means is 17 minutes after the market opened last night, our traders had all of these targets. The ES, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets, you'll see these targets drawn out. Just remember, our traders had those targets 17 minutes after the market opened. So let's go look at the daily chart of the bellwether, the S&P 500 Emini futures. Red and falling's now in the picture. This is where price is headed. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Just stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Now, when I say price always reverts to the mean, that simply means that price always returns to the BBC. And the pullback holds more often than it doesn't. When the black step line crosses blue and climbing, that typically leads to a retracement to the BBC. However, we had an instance here, highly unusual. The step line crossed. We did not get the retracement. That is the new all-time historic high put in on May 14th. We've been consolidating sideways here. And so as we consolidate sideways, the BBC rises to meet price. It has a whole different effect than when price drops to the BBC. We now have red and falling overhead. That represents potential resistance. Now for 1, 2, 3 days, the black step line served as good resistance. We did get above it yesterday, but we closed right at it. So right now, price is kind of trapped. The way price is positioned, the black step line now is potential support because it's directly below price. And of course, resistance is overhead at red and falling. And then the next resistance would be the high of May 15th. And then the all-time historic high, 75.40. Now, all the alerts are created on the 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose years ago. They say if it's not broke, leave it alone. So I took their advice, whoever they are. So both the logic alerts and the concierge trade alerts, the CTA list that I just showed you. Okay, this was the opening candle. Our traders had these targets 17 minutes after the open. The vertical line separates today Thursday, here's Wednesday, back here's Tuesday. The horizontal lines are the weekly trading zones. We've published those for our members every Monday for over 16 years. December 14th of 2009 was the first time we published them. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price rallies up to a weekly zone, we expect resistance until proven otherwise. And when price drops to a zone, we expect support until proven otherwise. And we haven't really seen much in the way of a drop this week. Now, we closed here, so we didn't really have a gap last night, but we opened with a down candle. We managed to get back above the BBC, and by 23:30, we had hit the CTA long target, which was based off where blue turned to red, right there. Resistance always sends the market looking for support. Support sends the market looking for resistance, and resistance sends the market looking for support. Now this low right here coincide with these lows from early. You see how price keeps getting rejected? That's actually bullish. We're below the BBC right now, but blue and climbing just showed up. So the market tried to go lower and bounced, tried to go lower and bounced, tried to go lower and bounced. Now this area right here, okay, you see how the black step line crossed blue and climbing, and price pulled back to the BBC. Price always reverts to the mean. Whether you pull up from below or pull down from above, the pullback holds more often than it doesn't. And as I said earlier, when the black step line crosses blue and climbing, that typically leads to a retracement to the BBC. That's exactly what we got. After we got the retracement, the step line then went back to the left side of blue and climbing. See how it crossed to the right side and then it crossed back to the left side? Okay, where it crossed back to the left side, okay, that creates an important price, important area. And that's what the market keeps trying to get through, that area. Now, this low last night, the opening low, was right where that cross started, where the step line started to go back to the left side of blue and climbing. Can you see that? Okay. And that support has still held, but the market it's trying to go lower. At some point, the institutional buyers will say, you know what, I've had enough, and they'll hit pause on the buy side, and this thing's going to drop like a rock. Where are we headed? To the BBC, the daily, and then the shallowest possible fib retracement is at 72.59. When's it going to happen? I don't know. All I know is it's going to happen. Here's where the Dow opened last night. We dropped to the BBC, the pullback held. Support sent us to resistance at the weekly trading zone. Resistance sent us back to support at the BBC. And then, boom, we hit the long target, which was based off where blue turned to red. We spiked it and spiked it and spiked it. Then we came down, and this was the Wall Street open right here. We hit the short target to the tick. Now, this is important. There's like a one tick wick on the low of that candle. And there's a wick to the upside. There's a wick to the downside, a wick to the upside, and then you've got this doji right in the middle. So you just lay your cursor right in the middle, because you know that's going to be an important price, important area. And look what price did. And again, our traders had these targets 16 minutes, 17 minutes after the market opened last night. Support sends the market to resistance. There it is, the long target. Resistance sends the market looking for support. And right now, the pullback to the BBC, it's still holding because all of these candles are physically touching. The Russell. This was the open last night. Pull back to the BBC. It held. Support sent us to resistance at the weekly trading zone. Again, when price rallies up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support until proven otherwise. So we had a leg and a retracement, a leg and a retracement, a leg and then a deeper retracement. Now this area right here where the market found support, it's the low of this candle, 2794.9. 2794.7. So 2 ticks difference. That's just simply market structure. Okay. When this candle opened, it was red, but then buyers came in at this price point. So no surprise that we found support there, which again sent us looking for resistance. We got through the weekly zone. We hit the long target. Now this resistance here, right here, you see where the black step line crossed blue and climbing, turning blue and climbing into red and falling? That's an important price, important area. Also, you have a wick sticking down and a wick sticking up. And when you put your crosshair right between, that's the high of today. Learning to read the charts is not that difficult. If you're new, it can seem a little chaotic, but there's a method to the madness. Here's price dropping to a zone, finding support. All right, we did have a gap lower open on the NQ last night. Surprising, right? I mean, NVIDIA's earnings, it was a blowout in a good way. Buy the rumor, sell the news. So we consolidate. One of three things happens when price encounters a weekly trading zone. 70% of the time it's this, consolidation. 20% of the time it's rejection. 10% of the time the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens, as it did here, price will typically retrace back to the zone it sliced through and continue in the direction of the slice. Not a picture-perfect example, but it'll have to do for now. So we're consolidating at the zone. We got blue and climbing below us, that's support. So we've got the zone for support and we've got blue and climbing as support. But we're below the BBC. So if the institutional buyers hang in there and keep buying, there's a good chance this market could turn itself around today. Crude oil, here's where we opened last night. Hit the BBC, pullback held. As you can see, price always moves in legs. It's just how markets work. Leg retracement, pullback held. Leg retracement, pullback held. Leg retracement, pullback held. And the pullback held, and it held, and it held, and it held, and it held, until it didn't. But then when it pulled back from below, guess what? The pullback held. And then the pullback held, the pullback held. What's going on here? Okay. We had a bullish cross here back on the 14th. That should have been good support. When the blue line gets above the green line, that's called a bullish cross. When you have a bullish cross, it leads to an extended move. The first time price revisits that area will almost always be good support. Buyers came in a little bit early. Anyway, that pullback held resistance, which sent us to the zone support, back to the BBC, and then we hit the short target. Which was simply based off where red turned to blue. We hit the target, support, and then we ran all the way to the other target, resistance. And that was based off right here, where price got back on the left side of red and falling. See how it crossed over, and you got the retracement to the BBC. But when it crossed back, that creates an important price, important area on the chart, and that's where the long target came from. So we've been consolidating, wide-ranging consolidation at that long target. We've now pulled back to the BBC, and looks like the market may want to go lower. If you're trading crude, this area right here, this bullish cross, that should be good support the first time down. So 99.70 down to 99.50. That would be $200 per contract traded. This was the open on gold last night. We're above the BBC. We expect higher prices. We got higher prices. Fortunately, they didn't stick. 45.72.4. And as we look left, that was a spot for potential resistance, but we didn't get there. Sign of weakness. So we get a leg and a retracement, pullback holds, and then we find support at the short target. Sends us up to the BBC. Now the short target was just based off this area right here, where the step line crossed back to the left side. And then this low of the session It's not an area I would have called for support. Market doesn't always do what you think it's going to do. Even once you learn to read the charts, I mean, think about it, 22,300 individual handcrafted alerts. You'd think there's no holy grail. Let me just say it. Many of you have spent years and fortunes, time and treasure, trying to find that method where you never get stopped out again. It's like looking for a black cat in the dark that doesn't even exist. I'm sorry. Now, can you recoup all that time and money that you've spent? No. But you can change what you do going forward. All right, Michael should be here. Silver. Last night off the open, we hit the long target. And then overnight, we hit the short target. Well, actually, that was 9 o'clock this morning. Short target was based off this low from yesterday. And the long target was based off this high from yesterday. Simple market structure. Okay. That brings us all the way back around to the daily chart. Again, for 1, 2, 3 days, the black step line served as good resistance because it was directly above price. Now that it's directly below price, it's potential support. But if we trade through, then the next important area will be yesterday's low, 73.56. And this support area that I drew in earlier, well, we can get rid of that now because the BBC has risen to meet price.
All right.
There you are.
There I am. Here I am. Okay, I'll do this. All right.
Okay.
Ready.
Go right ahead.
All right. Bring it over here, all the way across the country, and there it is.
Just like that.
Magic.
Okay, everything looks good.
All right, here we go. Good afternoon, everyone. Today is Thursday, the 21st day of 21st day of May 2026. I'll get it right. All right. Rushing back to my seat. 21st day of May 2026. Now, if you've not taken a free trial with us and you'd like to, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button. And when you do, it will bring you to this page, which will change tonight. Go to this page, and on this page, all that we ask for is your name, your email, and your phone number. Down at the bottom, it gives you TradingView login ID. All right, once you give us that login ID, we'll be able to get your indicators indicating on your desktop so you can follow along with us during the trial. And that is really the best way to take the trial. Get the indicators indicating on your desktop so you can follow along with us. All right. Now, let's go to the spreadsheet. We had our best day in a while today. Best day in a month, actually. We're up $1,392.50 per contract this morning. A lot of it on the NQ. We had some big trades on the NQ. I think we had 5 of them, maybe 4 of them that were the full 50 ticks. But anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 21st day of May, 2026. We made 243 ticks on the NQ, 63 on the Russell. This was our biggest down day on the YM, I think, ever. We're minus 80 ticks on the YM, plus 21 on the ES. Now, this was not the high of the day on the NQ. The high of the day on the NQ was 279. The Russell was the only one at the high of the day, I think, at 63. The high of the day on the YM today was minus 10 was the high of the day on the YM. 31, I think. Yeah, 31 was the high of the day on the ES. So the only one that actually finished at the high of the day was the Russell. About 1,392.50. Today it took 2 minutes and 1 trade to get to the goal for the day. And that was 8 ticks on the ES and It gave us $1,000 a contract. And today we traded 39 times. That's the most we've traded since all the way back here. I think before the whole Iran thing started, right? April 6th. I think. Nah, I guess the Iran thing was before that, wasn't it? May to April. Yeah, it's over 60 days now, I think. Anyway, 39 trades and 9 stop outs. We had a bunch of stop outs. So that's the lowest actually that we've had percentage-wise since last month, 76%. But our last 2 trades were stop outs. I think 3 out of our last 4 trades were stop outs. We were doing much better until we had those stop outs right at the very end. But anyway, on the month, that puts us at $94.95 over 14 days, averaging $678 per contract per 2-hour trading day. And on the year, we're at $88,547 over 84 days, averaging $1,054 per contract per 2-hour trading day. Now, let's see. Following the 24/20 blueprint, so far this year, we've worked 12.5 hours, just a little bit more than yesterday. And if you did everything just like I did and had all the same fills, all the same slippage and everything else, then you'd be trading 5 contracts right now. You'd be up $34,932. Okay, averaging $2,787 per contract. I mean, not per contract, but per hour. $27.87 per hour. All right. Let's go back to the actual trades. I think they're right here. Here they are. These are the actual trades. Let me save this right now. Now the markets get really choppy toward the end of the morning session. You see we had to stop out there. Oops. We had to stop out there. We had to stop out here. And we had to stop out here at the end of the morning session. Right there. 3 out of 4 trades in the morning session. We still did really well, but that brought our average down a little bit. I mean, the overall percentage of stop outs or non-stop outs. I digress. Let me bring up the question box in case anybody has any questions. I doubt there's going to be any today, but I'll bring it up anyway. All right, so these were the trades. We started out here with the Russell. Our first trade on the Russell, we picked up 31 ticks. Then the next trade, we picked up 25, I think, got us up to 56. Then we went up to 64. Then from 64, we went to 72, then 72 to 77. I think that puts us over here somewhere. Then we stopped out, went from 77 down to 52, and then went up to 63 right there. And that is where we ended it. That's where we ended it on the Russell. Okay. Let's go into the YM right now. In the YM, let's go all the way back here. Okay, on the YM, our first trade here on the YM, we stopped out and that was minus 25. And then on this one, we picked up 10 ticks to get us to minus 15. Then this one right here, 5 ticks to get us to minus 10. And that was our high of the day on the YM. We're at minus 10 right there. Oh, wait, we had something here that should went even better. I didn't write that one in. Then we stopped out here. We stopped out here and that put us at, I didn't write down whatever that gain was right there. I don't know what it was, but we stopped out here and that put us at minus 35. And then, okay, well, there's a plus 5, something that got us to minus 30. And then we stopped out again to minus 55. And there was another stop out that got us to minus 80. I have minus 80 written down in here. So somewhere in there was a gain and a stop out that I didn't mark. And that brings us current right here. And up close on this, look how tight it is right here. And up close on this would be a valid long trade. I don't really like it, but it'd be a valid long trade. And so far, we're getting our butts whooped from this guy. So it'd be 5,006. Or 50,006. 50,006 right there would be where the up closes. Okay. That was the YM. On the ES, it doesn't look like we're gonna get that on the YM. Okay, on the ES, all the way back to the beginning, here we are. Our very first trade was right here on the ES. We picked up 8 ticks on that one. And then 2 ticks on this one. I have this one highlighted in red because we didn't come out of the overbought down. I mean, not the wrong color blue, I mean, because we didn't come out of the overbought down there. But we picked up 2 ticks on that to get us to 10. And then we went from 10 to 20. So we picked up 10 ticks there. 1 tick there to get us to 21. Then we stopped out. That brought us down to 11. And we had 4 to 15. Then 3 to 17. No, 2 to 17. Then that one right there, we really, it says break even. I got slipped minus 1 tick. So we went down to 16 right there. Then we had a big trade right there. Went up to 15 ticks, I think. We went up to 31. And then we stopped out again right here, down to 21. And that was it on the ES. Okay. And we'll put that here now. Did the Russell ever give us that trade? It was right here. Was it right here? It was back here. Where was that trade? It wasn't here. It was after 1 o'clock. Would have been right here. Nope. That's not a valid trade, so it wouldn't have been there. Okay. Well then, I probably still have an order waiting in there. The Russell's headed up to the high of the day. The high of the day is at 34.5. The ES high of the day, that's a ways away. Okay, let's get into the NQ because I had a bunch of trades on the NQ today. Hit this back. Okay, so on the NQ, our very first trade right here, we picked up 10, then 7 more there to get us to 17. Then went from 17 to 65. So that should have been plus 50, but it wasn't. Then went from 65 to 66. That should have been plus 10, but it was 1. Then went from 66 to 94. Then 94 to 145. Then 145 to 151, 151 to 160. This one, I don't think made it off the mid-band. That's why I have the wrong color right there. I don't think it actually hit the mid-band. But it went from 145 to 151, 151 to 160. Then 160 to 170. And then we stopped out right here. So somewhere in there, that was a plus 10. And we stopped out right here. Went from 170 down to 144. Went to 153, 165. Then 219, and then 229, and 279, and then we stopped out, and that brought us down to 243, and that was our last trade of the morning. Now you see I have that drawing in there. And what I was doing at the time, I actually drew it out even more. I just erased the other one. I said if we get up above this level up here, we should make it up to here by the end of the day. Okay, we now got up above that level. We didn't make it all the way up. Yeah, we did. We made it all the way up there. Son of a gun. We made it all the way up there. All right. Well, that's what I was thinking we were going to do. I said, if we get up above this level, we should get up above this level by the end of the day. And so that's where we are right now. So it's pulling back right here. And this is a pretty good look right here at the retracement level that we have. Now it went from here all the way down here, all the way up to here. But it looks like it's retracing this part right here. Okay, I'll show you what I mean. This was the big move, but this is what it looks like it's working on right there. That's 50% retracement that it's working on right now. Okay, so that'd be a 25% retracement of the overall move, 24%, whatever. Just pointing that out so you can see what the market's leaning on. Like, it wouldn't surprise me to see it go all the way down to here. You know, the 50% mark of the overall thing, wherever that was. What was that? That was right here. Okay, drag this up. There, why don't I just get rid of that? I get rid of all of those things because they don't mean anything right now. They were from yesterday or the day before. This right here is what we're looking at right now. Okay, that's one potential. And then the other potential is right here where it is. Let me draw the fib on that. Be from, oops, and this. Be from right here up to there. Okay, so the other one is right here. All right, those are the two things that it's working on right now. Excuse me. And that's the NQ. The NQ. That's in the right place now anyway. All right. So that's it. So if you haven't taken a free trial with us and you want to, go here to mytradingIQ.com and click on the purple button. No credit card required. So go to the registration page. Just fill it out. Right. And that leaves us with 15 minutes to trade now. 15 minutes to trade. Okay. Everything's in the green. We need pullbacks everywhere. So I'm just waiting. If anybody has any questions, feel free to ask them at this juncture. If you don't have any questions, then it's okay. All right. That was a lot of words. Okay. That's not anything. Okay. It's all good. I feel like I'm kind of caught up right for the moment. Now, that is not a trade here. This is not going to be a trade here. That's not a trade there. This is probably, none of these are probably going to be trades. They're all going to come out of the oversold, and then they're going to have to redo everything. See, like that one just did. That one just did. They're all coming out of the oversold. Oh, that one didn't come out yet. Okay, but the other three did. We could still get something here on the Russell. Could still happen. And the ES could happen now too. The ES could turn into something. So get ready on the ES. The NQ can't, but the ES could, and the Russell's, the S is closest on these. There it is on the ES. That's a long. It's on the ES. It's almost stopped me out already. But it hasn't. The YM's almost a trade here too. Yeah, the YM needs an up close. We're still in this ES so far. Still in it. It stops at break even. Gonna lock in 2, 4, 8,000 bucks on the ES. The YM, I did get in the YM, but it took me out already, so it gave me a break +5, I guess. Let me go see what it gave me.
Good job.
Let's go see. Thank you. So we got 8 on the ES and 3 on the YM. Yeah, here I can show you all those. Here they were. Now the fills are all over the place today. They seem to be, but here's the 3 on the YM and here's the 8 on the ES. Okay. But it's just been a pretty good trading day, really. Markets are doing what they usually do. That's not a trade there. It didn't hit the mid-band. Okay. So we want to see everything run up. Going into the weekend, we want to see a huge move up everywhere. Huge moves up everywhere.
Historically, the markets do rally into a U.S. holiday weekend.
They do.
Did you have a chance to check out that alpha space?
I didn't. I haven't looked at that. During the break, I had to go somewhere.
I haven't either, but I'm looking at it right now. The new way to level up your strategy, now part of Yahoo Finance Gold. You got a free trial, and monthly it's $50. Yearly, it's $39.95 a month.
And Yahoo's the one who's making this.
Yep. I'll put the link in the boardroom.
Okay, cool. All right. Yeah, I got a busy day today. And then we have a partners meeting tonight. It's Thursday.
Yep.
And the last couple of them have been long ones.
Yeah, last two have. All right, so I put that link over in the boardroom for you.
Okay, I see it. Thank you. All right, so it's 1:20, just about 1:22. We got about 8 minutes left here. We've had two trades, and they both did what we wanted them to do. Though I only got 5 ticks out of this YM trade, or 3 ticks out of this YM trade. I did get 8 ticks out of the ES trade right here. But they're both running up and doing what I wanted them to do. This is going down like I wanted it to do. There's some gappy stuff happening right there. You see that? Both the ES and the NQ. Gappy. We need an up close. Up close on the NQ. Oops. We did not get the up close on the NQ. It's good because I kept screwing up with my mouse trying to put it on. I put it in the wrong place twice. The YM and the Russell are both positioned for an up close trade. The ES was not. The YM is actually the YM did give the trade right there. I didn't realize that. The Russell did too. I didn't realize the YM did. So you can jump on it still right now. Probably shouldn't. Wow. I'm glad I missed those trades. Look at the way they turned down right here. I was not expecting that. I want that to stay well below 850. So, scrunching this back up. Those levels that I drew in there a few minutes ago, because we ran so far up right here, these levels, they're not really in play anymore. From here to here is what it would be now. And right at that acting as resistance now. Bring it over here to the end. But I'd like to see is it just run right back up. This just be a 50% retracement that it ran through a little bit for it to run right back up and put in new highs again. Okay, it's not giving us a trade setup, so hopefully that's what it's going to do. And on the YM, we needed, I was going to say we needed down close. We don't. We're in the green background. We don't need a down close. That's deceiving. It should have flipped the YBR right here. If it would have flipped the YBR, this would be a nice retracement of this leg down, being in the overbought, but it's not. It almost fooled me. All right. All right, we are at the mid band here. on the ES. We need a down close on the ES, and the high of that is 50. No, it's something else. 60. So you'd be selling 58. Now it's getting away from us. 60 and a half. 58 and a half. Unless it goes up some more. I got my order waiting at 58 and a half. Here, okay. It's on top. So unless it goes up some more, 58 and a half is right. And there it is. We're in it. And I'll log in 2. And we're out of it with 2. 2 more. Okay. And this, I know it looks like a short trade. If you got rid of the context here, it's pulled back a 50% retracement of this leg down coming out of the overbought. That should go down from here. But because the background color is telling us the overall picture is up, we're not going to trade it. The ES didn't finish the cycle. So we wait a few more minutes here. Just a few more minutes. Nothing here. Nothing here. And nothing there, and nothing here. All right, this, yeah, this is not a trade here. I thought I hadn't painted, but it looks like it did. Yeah, it did. Still not a trade. It's not going to be a trade. It's probably going to flip to YVR. The S is flipping it. The NQ is probably going to flip it too. That one's flipped. Now the S is going to flip it too. And we only have 30 seconds left. This is time for one NQ trade right here. It looks like an up close on the NQ would be a long. Okay, need that up close and that'd be a long trade on the NQ. That would be our last trade of the session, I believe. It's almost there. Almost there. 12 seconds. Ding, there it is. All right, here it is. We're in it. Gonna be plus 36, and minus 36, or plus something. Minus 36 is what it was. That stinks. I could have let it go. I should have let it go. But anyway, we stopped that on that one. So minus 36 on the EQ. 1 Q minus
There's
36.
no high impact news tomorrow.
I thought there was one high impact news tomorrow.
Yeah, if there is, I missed it.
Yeah, let me see. Because I almost said it was today. Right here, Michigan consumer sentiment. You might not show that as high, though. You might show that as medium.
Yeah, I think I do.
Yeah, that's what it is. I don't believe it should be anything, but but it is what it is. All right, so let me fill out the sheet for today, guys. All the way down to the bottom here.
And it looks like the bond market's going to force Kevin Warsh to raise interest rates. Boy, that's not going to make Trump a happy camper. If he can get this Iran thing finished before the next FOMC, that could change everything.
Yes. All right, so on the NQ, we actually just had a minus 36 on that. On the Russell, we didn't have anything. On the YM, we had 3, and on the ES, we had 10. So let's see. Copy. Paste. Oh, minus 650 because of that stop out. All right, so it's going to be a white day. That stinks. If I wouldn't have done that one, if I wouldn't have done that trade, that were a 0, would have been up $1,150. But it is what it is. Ran out of time. Wait. This is in the wrong spot. That needs to be over here. Right? Is that? No, that's in the gold spot. Okay, well, it's going to be a little bit better, but not enough. 10. There, minus 400. Okay, so today we had 4 trades. 4 trades with 1 stop out. And it was 15 minutes, just like the last time. So this, I'll have to copy the white one. Paste, 75%. Right, today is our 96th day. So this is the way we're wrapping it up, guys. We're minus 400 in the session because we stopped out on that one right there. We had 4 trades with 1 stop out, and we did have the goal for the day. Easily we had the goal for the day. So again, if you quit trading, you get the goal for the day. In the session, over 96 sessions, we're averaging $116 per session. These sessions are averaging just about 14 minutes per session right now. So if you can't get your goal in the morning, or if you don't have time to watch the morning, you can come into here every afternoon, and we do it all over again. All right. If you haven't taken a free trial, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button, and it will bring you to this registration page. Just fill it out. And that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah. Guys, if you take the trial, there's 2 things you should do right away. 1, get Telegram installed on your desktop and your phone. It's free. It's fast, secure, all that. And then book a one-on-one mentoring session with Michael, myself, or even both of us during your free trial. Otherwise, you're just going to kind of be, you're going to be staring at a lot of stuff you don't understand. And so we want you to understand it. And the best way to do that is via a one-on-one session. So
that is right.
And while the live training room is only open 2 hours every trading day, it doesn't mean we only work 2 hours a day. We literally work around the clock. We provide customer service via Telegram around the clock. I mean, it's really important. I know a lot of people just blow right past that step and go, you need to get in there, because we have a trial discussion channel, and it's filled with all kinds of charts. Stefan does a great job of marking up his charts. And even Owen, who I haven't seen in a while, he was in there this morning trading along with Stefan. So,
was he?
Yeah.
Good. Excellent.
Yep. Okay, recap of the morning session.
Today it took 2 minutes and 1 trade to get to $1,000. 10 contracts.
Good job.
Thank you very much.
All right. Well, good to have you back.
Yes, good to be back.
Get settled in and stuff. Here's one last look at the ES, guys. it really is trying to get up to resistance there at red and falling. We're just off the high of the session. So when earlier I talked about if the institutional buyers will just keep buying a little bit longer, we could possibly turn this thing around. And that looks like it's happening. So, but keep in mind at 74.86, potential resistance. If we get through that number, 74.86, then your next major resistance is going to come in at about 75.28. And then the all-time historic high, 75.40. I mean, we're so close. But that red and falling overhead, that could grind it to a halt. I covered all the markets in granular fashion, as I do each and every day. So if you missed any part of today's broadcast, about 10 minutes after I sign off here, you can go to youtube.com/CFRN and watch the entire broadcast, or you can just fast forward to the part where Michael started trading. This is the high of the session right here. We failed to take it out with the last 30-minute candle. So this is important, because if we can break today's high, then right here we got potential resistance at 74.75. So this is Thursday, Wednesday, Tuesday, Monday. That would be this high from Friday. Okay. So anyway, I dissected each market as I always do, and on the Dow we hit the short target pretty much to the tick, and we've hit the long target a couple times. The Russell, remember what I said at the beginning of the broadcast? I said the Russell looks like it's trying to lead the market to the upside, and well, there's proof. In Q, we've pinged back and forth between the zone and the long target, back to the zone, back to the long target, back to the zone. Now we've overcome the long target, and if we can take out this double top that's in place, this thing could rally right on up to the next zone overhead. Crude is actually down today. We hit the short target twice. And with this much red and falling overhead, I suspect we're going to find resistance at this zone right here, 98.70/75, and that should send us back to the short target. Gold, wow, it did turn around nicely. It's like it's trying to hit the long target a second time. And silver, off the open last night, we hit the long target, and then we hit the short target off the Wall Street Open this morning. Now we're all the way back to the long target. High of the session on silver is $77.29. Remember, when the price of silver moves $1, it's worth $5,000 per contract traded. Now, if silver continues higher, watch this area right here. We had a bearish cross 2 days ago, Tuesday. And that bearish cross is roughly 77.48. I always try to be conservative on that. And if we break that, if we take out that bearish cross right there, then your next resistance is going to be up here at about 78.74. And then 79.40. Sounds good to me. All right. Institutional buyers are still hitting the buy button. To become a member, you need to get in touch with Valerie. You can email her support@cfrn.net. You can call her at 949-42-EMINI. You'll probably get her voicemail. Just leave a message and she will call you back. Let her know you're interested in becoming a member. She will send you an email that explains everything. Once you get that email and read through it, you can make a well-informed, intelligent decision as to whether or not what we do is right for you. Keep in mind that unlike most places out there, they say some indicators, some oscillators, some algorithm, whatever. And then maybe they give you a set of instructions, a nice little PDF, or even a video to watch. And then they just vanish. 9 out of 10 new traders fail simply because they don't have anyone to teach them how to trade. Imagine any profession in the world, and you'll recognize the importance of having someone teach you how to do the job. Carpenter, banker, brain surgeon, barista. You need somebody to teach you how to do it. So for 2 hours every trading day, that's exactly what we do. And if that weren't enough, you have access to private one-on-one mentoring once you become a member. Now, you can have a mentoring session during your trial, but you'll have unlimited access to one-on-one private mentoring after you become a passport holder. The strategy you learn and the indicators you use as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, doesn't matter because price flows the same across all markets and all time frames. Just as I've shown you today and show you every day, from support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. Wouldn't it be nice to know where to expect potential support or where to expect potential resistance? Well, that's what the Logic 247 alerts are all about. Helping you learn to read the chart and know where to anticipate potential support and potential resistance. As a passport holder, you'll get the concierge trade alerts every evening, typically 5 minutes ahead of the Globex Open. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. And every Thursday night, that's tonight, you're able to attend the members-only workshop. As Michael just said, the last 2 workshops both ran about the full 2 hours. Some nights we're in there, there's not a lot of questions, and we're done 15-20 minutes. 2 weeks ago, I went through how I create the Logic 247 alerts, and last week, Michael went through the whole options thing and how to get your account enabled for options. So I don't know what we have on the agenda tonight. Probably your questions. If you remember, you can send your questions in ahead of time. Telegram, email, however you choose. And the questions that get sent in ahead of time, we hit those first. Because we figure the reason you're sending your question in ahead of time is because you can't be there personally. So we try to cover those at the very beginning of the workshop. So when you get around to watching the workshop video in the private channel, you won't have to wade through the whole thing to find out when we answered your question. It'll typically be right up front. We open with prayer and then we just hit the questions. So please have your questions ready so we can do our very best to provide you with an answer. Last but not least, you get the golden keys that opens all the private channels in Telegram, and there's a lot. Everything a trader needs, all under one roof, one low price. Round the clock support. It's a pretty good deal. I checked. All right, we're going to wrap it up with our good word for today. Know who you are. 1 Corinthians 15:10. By the grace of God, I am what I am. I think Popeye said that too. So who are you? It seems like a simple question, but is often one of the most challenging to answer. To know who you are and what you stand for. to be aware of how you're perceived by others and how you present yourself to the world is one of the most important aspects of a well-lived life. This could be called your personal brand. Your brand consists of attributes that are present for every encounter you have, whether it's with work colleagues, family, or friends. You could call them deliverables, virtues you bring to all your social and business interactions. You may take your deliverables for granted, but consider writing down your own personal mission statement. What is your purpose? What are you about? What is your vision? Does your life truly reflect what's important to you and how you want others to see you? So often we live our lives based on what those around us think we should be or do. We follow the path we've seen others take, or we pursue what the media defines as success. Eventually, and sometimes surprisingly, we may find ourselves frustrated, angry, and disappointed in life. Have you ever heard business professionals lament about climbing to the top of the corporate ladder, only to find that it was leaning against the wrong building? They were so busy keeping up with what they thought they were supposed to be doing that they never stopped to ask themselves what they actually wanted to do. So be like Paul. Know who you are, honor your personal brand, and say, by the grace of God, I am what I am. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.